Based on the historical data and forecast, Bitcoin has shown volatility with a recent downtrend. The RSI consistently hovers around the mid-range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands suggest potential trading opportunities. The price is currently near the bottom of the Bollinger Bands, suggesting a potential bounce. Given the forecast for the next week, which predicts a sideways movement around 79,000 to 80,500, I recommend a long position strategy. I suggest entering a long position at $79,400. Given the recent price action and the forecast, the stop loss should be set at $76,300, just below the support level. The initial target price should be $80,500, aligning with the upper end of the forecast range and the upper Bollinger Band. If the price breaks through $80,500, we can adjust the target price to $81,100, the resistance level. This strategy combines the Bollinger Band's indication of a potential bounce with the RSI's neutral signal and support and resistance levels to manage risk and maximize potential returns. Based on the historical data and forecast, Ethereum shows a downtrend. The price has been consistently falling since March 28, 2025, and the forecast for the next week indicates further decline. The RSI is consistently below 50, with recent readings in the oversold territory, below 30, suggesting potential for a short-term bounce, but the overall trend remains bearish. The Bollinger Bands are widening, indicating increased volatility. Given these factors, I recommend a short selling strategy. We will enter a short position at $1,560, with a stop loss at $1,580 to protect against a potential bounce. Our target price is $1,470, aligning with the established support level. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI rises above 30 and the price touches the bottom of the Bollinger Bands, we will consider covering the short position. This would act as a secondary exit strategy to capitalize on a potential short-term rebound. However, our primary target remains $1,470. This portfolio combines a trend-following approach with momentum indicators for enhanced risk management and profit potential. The strategy aims for high returns by exploiting the downtrend while mitigating risks through careful stop-loss placement and a secondary exit strategy. Based on the historical data and forecast, XRP has been experiencing a downtrend, consistently testing the support price of $1.8. The RSI consistently dips below 40, indicating an oversold condition. The forecast for the next week projects further declines, reinforcing the bearish sentiment. Therefore, I recommend a short selling strategy. We will enter a short position when the price reaches $1.96. The stop loss will be set at $1.97 to protect against a sudden price reversal. The initial target price will be $1.8, aligning with the established support level. To refine the strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, around $1.96, it signals a potential shorting opportunity. The entry price will be $1.96, with a stop loss at $1.97. The first target price is $1.8, coinciding with the support level. If the price bounces off the support and reaches the middle of the Bollinger Bands, around $2.15, we will close the position and take a profit of $0.15. This combined strategy balances risk and reward, capitalizing on the prevailing downtrend while incorporating technical indicators for enhanced precision. Based on the historical data and forecast, BNB shows a downtrend recently, with a significant drop from $611 to $553. The RSI consistently below 50, particularly dipping to 34.6 on April 10, 2025, indicates an oversold condition. The forecast for the next week predicts continued downward pressure, with prices ranging from $575 to $579. Considering these factors, I recommend a short position strategy. Enter a short position at $575, placing a stop loss at $582 to limit potential losses if the price reverses. The initial target price is $567, aiming for a quick profit. To refine this strategy, we incorporate the Bollinger Bands. The price is currently trading near the lower band, reinforcing the downtrend. If the price touches the lower Bollinger Band, which is $548, we can tighten our stop loss to $553, the support level, securing profits and reducing risk. If the price reaches $567, we can move the stop loss to the entry price of $575 to lock in profits. A final target price of $567 is set, balancing risk and reward. This portfolio combines RSI and Bollinger Bands to maximize returns while minimizing risk. Based on the historical data and forecast, Solana has been exhibiting a volatile trend with periods of consolidation and downward pressure. The RSI consistently fluctuates, dipping below 33 on April 9, 2025, indicating an oversold condition. Considering the support price of $105 and the forecast for the next week, I recommend a long position entry at $111 on April 11, 2025. The stop loss should be set at $105 to mitigate potential losses if the price breaks below the support level. The initial target price is $113, based on the forecast for April 11, 2025, and a secondary target of $117, aligning with the recent resistance level. To refine this strategy, we will incorporate Bollinger Bands. The price has frequently touched the lower band, suggesting potential for a bounce. If the price approaches the lower Bollinger Band around $103, a secondary entry point can be considered with a stop loss at $101 and a target price of $111. This combined approach, utilizing both RSI and Bollinger Bands, aims to capitalize on both oversold conditions and potential price reversals, offering a robust and adaptable investment strategy for Solana. Based on the historical data and forecast, Dogecoin demonstrates a downtrend with periods of consolidation. The price has been fluctuating between a support of $0.142 and a resistance of $0.163. The RSI has consistently remained below 50, indicating a bearish sentiment, with readings dipping into oversold territory, below 30, on several occasions. The Bollinger Bands show the price frequently touching the lower band, suggesting potential for a bounce, but the forecast prices remain relatively low, indicating continued downward pressure. Therefore, I propose a contrarian strategy capitalizing on potential short-term bounces while acknowledging the overall downtrend. My recommended strategy is a combination of RSI and Bollinger Bands. When the RSI falls below 30, oversold, I would initiate a long position at $0.15. The stop loss would be set just below the support level at $0.141 to mitigate potential losses if the price continues to decline. The initial target price would be the resistance level at $0.163. However, given the forecast and the overall bearish trend, I'd implement a trailing stop loss, moving it up to $0.158 once the price reaches $0.16. A second target price would be $0.163. This strategy aims to capture short-term gains during potential bounces while protecting against further downside risk. Based on the historical data and forecast, TRON shows a slight upward trend, bouncing between support at $0.229 and resistance at $0.238. The RSI fluctuates around 50, indicating neither strong overbought nor oversold conditions. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper and lower bands. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position when the price dips towards the support level of $0.23, placing a stop-loss order at $0.229 to mitigate potential losses. The target price will be set at $0.242, aiming to capture a reasonable profit within the prevailing range. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI falls below 30, signaling an oversold condition, we'll enter a long position at $0.23 with a stop loss at $0.228. Conversely, if the price touches the lower Bollinger Band, we'll also consider a long entry at $0.23 with the same stop loss. The target price remains $0.242. This combined approach leverages both momentum and volatility indicators, enhancing the probability of successful trades. The portfolio will prioritize the combined strategy, incorporating both RSI and Bollinger Band signals for improved risk management and potential returns. Based on the historical data and forecast, Cardano shows a downtrend with significant volatility. The RSI consistently fluctuates, dipping below 40 and approaching 50, suggesting indecision rather than strong directional momentum. The Bollinger Bands indicate periods of contraction and expansion, reflecting changing volatility. The forecast for the next week projects a continued sideways movement, with prices hovering around $0.61. Given this analysis, a cautious, short-term strategy focusing on potential rebounds near the support level is warranted. My recommended strategy is to enter a long position at $0.611. The stop loss should be set just below the support level at $0.575 to protect against further downside risk. A conservative target price is $0.619, aiming for a modest profit. This strategy leverages the potential for a short-term bounce off the support level while limiting potential losses. The RSI is currently below 40, indicating an oversold condition, which could trigger a temporary upward movement. Additionally, the price is near the bottom of the Bollinger Bands, further supporting a potential rebound. This is a high-risk, high-reward strategy suitable for experienced traders. Based on the historical data and forecast, Chainlink has shown a declining trend with periods of consolidation. The recent price action has consistently tested the support level of $10.9, and the RSI readings have frequently dipped below 30, indicating oversold conditions. The forecast for the next week suggests continued sideways movement around $11.8 to $12.3. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces. Specifically, when the RSI falls below 20, initiate a long position at $10.9. Set a stop loss slightly below the support level at $10.7 to protect against further declines. A reasonable target price would be the center of the Bollinger Bands, around $12.1, aiming for a quick profit. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the bottom of the Bollinger Bands, which is around $10.7, it suggests a potential rebound. Enter a long position at $10.9, place a stop loss at $10.7, and target $12.3, aligning with the forecast high. This combined strategy leverages both RSI and Bollinger Bands to capitalize on short-term price swings while managing risk effectively. The portfolio will be 70% based on RSI strategy and 30% based on Bollinger Band strategy. Based on the historical data and forecast, Avalanche shows a downtrend with significant volatility. The price has been fluctuating between a support level of $17.9 and a resistance level of $24.7. The RSI indicator has spent considerable time below 50, indicating a prevailing bearish sentiment. The Bollinger Bands have been widening, suggesting increased market uncertainty. Considering the forecast for the next week, the price is expected to remain in the $17.3 to $18.6 range. Therefore, I propose a short-term contrarian strategy focused on capitalizing on potential bounces from the support level. My recommended strategy is to enter a long position at $17.5. Given the volatility, a stop loss should be placed just below the support level at $17.3 to limit potential losses. The initial target price is set at $18.3, aligning with the upper end of the forecast range and a potential bounce from the support. If the price reaches $18.3, consider moving the stop loss to break even to protect profits and potentially extend the target to $18.6, coinciding with the higher forecast price. This approach combines the RSI oversold signal with the support level and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, eCash shows a slightly decreasing trend with recent price fluctuations. The RSI consistently hovers around the mid-30s to 40s, indicating neither strong overbought nor oversold conditions. However, the recent dip in RSI to 27.5 on April 9 suggests a potential oversold opportunity. The Bollinger Bands show that the price has been oscillating within the bands, and the forecast suggests a continued sideways movement with prices ranging between 0.0000181 and 0.0000183. Considering these factors, I propose a moderately bullish strategy focusing on short-term gains. My recommended strategy is to enter a long position at 0.0000181, capitalizing on the forecast price and the potential bounce from the support level of 0.0000168. To manage risk, set a stop loss at 0.0000175, just below the recent support level and the bottom of the Bollinger Bands. The target price should be 0.0000186, aligning with the recent resistance and a reasonable profit target given the sideways trend. This strategy combines RSI oversold signals, Bollinger Band support, and forecast data to maximize potential returns while minimizing risk. The portfolio will be 60% long eCash, 30% cash, and 10% in stable coins. Based on the historical data and forecast, the Sandbox has shown volatility with periods of both upward and downward trends. The RSI consistently dips below 50, indicating a generally weakening momentum. However, the recent readings have been climbing, suggesting a potential shift. Considering the support price of $0.256 and the forecast for the next week, I recommend a cautious long position. We will enter a long position at $0.247. The stop loss will be set just below the support level at $0.255 to mitigate potential losses if the price breaks down. The initial target price will be the resistance level of $0.272, aiming for a quick profit. To refine the strategy, we will incorporate the Bollinger Bands. The price has been fluctuating within the bands, indicating a range-bound market. If the price approaches the bottom band, around $0.245, it signals an oversold condition, reinforcing our long entry. If the price touches the top band, around $0.251, it suggests an overbought condition, prompting us to move the target price to $0.26. This dynamic adjustment based on the Bollinger Bands will allow us to capitalize on short-term price movements while maintaining a disciplined risk management approach. The portfolio will be 60% based on RSI and 40% based on Bollinger Bands. Based on the historical data and forecast, Zcash shows a fluctuating trend with periods of consolidation and minor upward movements. The RSI consistently hovers around the 50 mark, indicating neither strong overbought nor oversold conditions. However, the recent dip in RSI to 43.9 on April 9 suggests a potential oversold condition. Considering this, I recommend a moderately bullish strategy. We will initiate a long position at $36.3. The stop loss will be set at $33.8, just below the established support level, to mitigate potential losses. The initial target price will be $37.9, aligning with the forecast for April 16 and utilizing the resistance level of $37.5 as a secondary target. To refine this strategy, we will incorporate the Bollinger Bands. If the price breaks below the lower band, which has been fluctuating between $27.5 and $31.1, it signals a stronger bearish trend, and we will exit the position. Conversely, if the price touches the upper band, which has been fluctuating between $38.4 and $42.2, it indicates a potential for further upward movement, and we can adjust the target price to $38.9. This combined RSI and Bollinger Bands approach should provide a more dynamic and adaptive investment strategy for Zcash. Based on the historical data and forecast, Solayer shows a clear upward trend. The RSI consistently fluctuates, but the recent values above 50 suggest bullish momentum. The Bollinger Bands have been widening, indicating increased volatility and potential for price movement. The forecast for the next week predicts a continued rise, with prices reaching $2.04. Therefore, I recommend a long position strategy focusing on capitalizing on this upward trend. We will implement a tiered entry strategy. First, enter a long position at $1.74 with a stop loss at $1.68, targeting $1.85. If the price reaches $1.85, we will move the stop loss to the entry price of $1.74 and target $1.91. If the price continues to rise, enter another long position at $1.81 with a stop loss at $1.74, targeting $2.01. Finally, if the price reaches $2.01, we will move the stop loss to $1.81 and target $2.04. This strategy combines RSI and Bollinger Band signals to maximize potential gains while minimizing risk. Based on the historical data and forecast, Bittensor has shown significant volatility, with recent price drops and subsequent recoveries. The RSI consistently remained below 50, indicating a generally oversold condition, particularly with a reading of 30.1 on April 9, 2025. The forecast suggests a potential upward trend, with prices gradually increasing from $211 to $230 over the next week. Considering the support level at $211 and the recent oversold RSI, I recommend a long position with an entry price of $211. A stop loss should be placed just below the support level at $198 to mitigate potential losses if the price continues to decline. The initial target price should be set at $230, aligning with the forecast high and previous resistance levels. To refine this strategy, we'll incorporate Bollinger Bands. The price is currently near the bottom band, confirming the oversold condition. If the price breaks above the center band of $232, it signals a strengthening upward trend. In this case, we can raise the target price to $246, the previous resistance level. Conversely, if the price fails to break above the center band and falls below the lower Bollinger Band, it suggests further downside potential, and the stop loss should be adjusted accordingly. This dynamic approach, combining RSI and Bollinger Bands, aims to maximize potential returns while managing risk effectively. The portfolio will be 60% based on the RSI strategy, 30% based on the Bollinger Band strategy, and 10% based on the support and resistance strategy. Based on the historical data and forecast, Render exhibits a volatile trend with periods of consolidation and brief upward movements. The price has been fluctuating around the support level of $3.23 and the resistance level of $3.51. The RSI values have mostly been within the neutral range, indicating that the asset is neither significantly overbought nor oversold. The Bollinger Bands show periods of contraction and expansion, suggesting changing volatility. Considering these factors, I propose a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. We will initiate a long position when the RSI dips below $38, signaling a potential oversold condition, and the price touches the support level of $3.23. The entry price will be $3.23. The stop loss will be set just below the support level at $3.15 to protect against further downside risk. The initial target price will be the resistance level of $3.51, representing a reasonable profit target based on recent price action. If the price reaches $3.51, we will move the stop loss to break even, securing the initial investment. If the upward momentum continues, we will set a second target price at $3.75, based on the previous high. This combined strategy aims to capitalize on potential upward movements while mitigating risk through strategic stop-loss placement and profit-taking targets. The forecast data suggests a slight upward trend in the coming days, further supporting this bullish strategy. Based on the historical data and forecast, AMP shows a downtrend with periods of consolidation. The support price consistently remains at $0.00346, while the resistance fluctuates but generally caps around $0.00367. The RSI has been largely below 50, indicating a bearish sentiment, and has recently crossed above 40, signaling a potential short-term recovery, but still below the overbought level of 80. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the lower band, suggesting potential oversold conditions. Therefore, I recommend a strategy that combines RSI and Bollinger Bands for optimal returns. My proposed strategy involves a long position when the RSI dips below 30 and the price touches the lower Bollinger Band, indicating an oversold condition. The entry price would be $0.00344. A stop loss should be set just below the support level at $0.00340 to mitigate potential losses. The initial target price would be the resistance level at $0.00367. If the price reaches the resistance, we can consider a trailing stop loss to protect profits. A second target can be set at $0.00375 if the momentum continues. This strategy aims to capitalize on short-term price bounces while minimizing risk through strategic stop-loss placement. Based on the historical data and forecast, PAX Gold exhibits an overall upward trend. The RSI consistently fluctuates, dipping below 50 on several occasions, indicating potential oversold conditions. The Bollinger Bands show periods of contraction and expansion, suggesting volatility. Considering the forecast for April 11th to 17th, with prices ranging from $31.40 to $33.40, I recommend a long position strategy. Specifically, enter a long position at $3,140, placing a stop-loss order at $3,050 to mitigate potential losses. A reasonable target price would be $3,250, anticipating the upward momentum indicated by the forecast and the overall trend. To refine this strategy, I will incorporate the RSI and Bollinger Band signals. When the RSI falls below 20, consider a long entry, and when it exceeds 80, consider exiting the position. When the price touches the lower Bollinger Band, it signals a potential buying opportunity, and when it touches the upper Bollinger Band, it signals a potential selling opportunity. Combining these signals, I suggest entering a long position at $3,140 with a stop loss at $3,050 and a target price of $3,250. If the RSI reaches 80 or the price touches the upper Bollinger Band before reaching the target, consider exiting the position to secure profits. This combined strategy balances trend following with volatility and momentum indicators for optimal returns. Based on the historical data and forecast, Decentraland has been experiencing significant volatility. The price has fluctuated between a support level of $0.235 and a resistance level of $0.262. The RSI has been oscillating around the 40 mark, indicating a neutral to slightly oversold condition. The Bollinger Bands show that the price has recently touched the lower band, suggesting a potential bounce. The forecast for the next week indicates a slight downward trend, with prices ranging from $0.228 to $0.239. Considering these factors, I recommend a moderately bullish strategy with a focus on short-term gains. The strategy involves entering a long position at $0.213. The stop loss should be set just below the support level at $0.208 to protect against a potential breakdown. The initial target price is set at $0.241, aligning with the recent resistance level. If the price reaches $0.241, we will move the stop loss to break even. If the price continues to rise, the final target price will be $0.262, which is the resistance level. This strategy combines the RSI's oversold signal with the Bollinger Band's potential bounce, aiming to capitalize on short-term upward movements while minimizing risk. Based on the historical data and forecast, Curve DAO shows a mixed trend with periods of volatility and consolidation. The support price is consistently at $0.468, while the resistance is at $0.788. The RSI fluctuates between 41.7 and 58.6, indicating occasional oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Given the forecast predicting an upward trend, I propose a long position strategy. I recommend entering a long position at $0.521. The initial stop loss should be set just below the support level at $0.468. The first target price is $0.613, aligning with the forecast for April 17, 2025. If the price breaks through $0.613, we can adjust the stop loss to the entry price of $0.521 and set the second target price at the resistance level of $0.788. This strategy combines the RSI signal, Bollinger Band's breakout potential, and the forecast to maximize potential returns while managing risk.